hi traders, here's a new video. First of all, the risk warning: your invested capital may be at risk. Don't trade with money you cannot afford to lose, and this video is not an investment advice. So this video is another live trading explanation video of those things which I have explained in my ebook. Get this ebook, it's for free, you'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern and binary option, turbo trading concepts, market condition, trend identification, rejection and candlestick math, and a lot of more concepts which can be applied to any kind of financial instrument and any kind of time frame. So get this ebook, it's for free, you'll find the link in the description, and in the description you will find also the link to the Facebook group. So what is happening here? Let me see. What is happening here? Yes, in the money, but what was this? Yes, that goes going crazy. So okay, I will show you now those, because this video is in particularly the second part of this one, what I have explained before in the previous video, yes, where I showed you how to understand these drawings here, which I have done because I got so many questions from users who asked me they asked me to do a live chart examples of those things because they didn't understood what I'm showing. And the last video was about the Bollinger Band. I have demonstrated those kind of things based on the live chart, and now I'm going to show you all those things based on EMAs, yes, and also how you have to do your trades there. So let me see. I will remove here the Bollinger Bands so it's more clear to you. So let me remove them. So that is, yes. And the first one, what I was talking about, I'm going to talk is the constriction. Yes, the constriction is this, what I'm explaining here, what I explained here, that part here. Yes, you see, price. Let me show you this. Yes, price here, constriction. You see here the 50 EMA, yes, and the 20 EMA are converging. Yes, they are getting together, and price is then channeling, yes, in between. That is what the consolidation area is about. Yes, that is the constriction, yes. Let me show you if I can show you another constriction. You have only to look out for the EMAs, and if the EMAs are together, yes, here for example, here we have another constriction. It's not a nice one, yes, but that is a constriction. You see here the 50 EMA is going up, that is going down, yes, and the price is in between here, yes, between the EMAs and doing a consolidation area. So here another constriction here, yes, this is what constriction is about, what I have shown you here. The 50 EMA, the 20 is going up, yes, and price is in between. That is what you have to know, yes, and that is how consolidation areas are created, yes. So here again, you see here constriction here also, yes. Let me show you this again. Constriction getting together, yes, and to enter on one of those edges, yes, or if there is a breakout, that would be here in this case. Let me show you this, the constriction here of this one, for example. You get here, so you get here the constriction here, you have here the 100 EMA, and here you have the 50 EMA. The price is in between, yes, and on the pullback here after this one, the breakout and the rejection from here, you can trade this kind of candle, the breakout candle, after the flat breakout, yes. Let me show you another constriction. So another one would be, for example, this one here. Yes, here for example, you have here the 20 EMA goes down, the 200 EMA is flat, this candlestick breaks out of this kind of area, yes, and then you can trade this kind of the pullback, yes. And the same is valid here for all kind of this here. This market is obviously not the best one to trade, yes. You see it's really risky at the moment to trade, because you have seen my trade was also a little bit risky. So, and the same is valid here, yes. You have here the constriction area, consolidation area, yes, and it's going up, and after this you get a rejection from this candle, and then you trade this breakout candle, yes. Or this is what I have explained here as the pullback. This kind of pullback, yes, it can be longer, it can be 1, 2 or 3 candles, or it can be also 1 candle only, and that is what I talked about, breakout, yes. You can surfing the trend, yes, surfing the trend yes, that was this one kind of part. There's a breakout, yes, or the trade the pullbacks, or also the fake breakouts. Yes, you can enter also here at this kind of edges, but it's a little bit the candlesticks should be greater. Yes. Not if they are so close together and only so tiny. The candlesticks should be greater. So that was the constriction. Yes, the same you see here also. Constriction, the 20 EMA, 50 EMA, and the 20 EMA are converging and convergent. They are getting together, and then there will be the breakout. So let me show you the next. The next is the expanding. Yes. Therefore, this I need the 20 SMA. Yes, the 20 SMA is the middle Bollinger Band. I will put the middle Bollinger Band in here, yes, and then we are going to show you what it explains. So the middle Bollinger Band is the white one, and the 20 EMA is, for example, the yellow one, yes. And I'm going to show you now how it's explained. So wait, I have to remove this. So I remove the other ones because else it is a little bit. So only the 20, the middle Bollinger Band is the white one, yes, and the 20 is the yellow one. So, and that is what I have explained here is, if they are getting wider, it's a bandwise, it's this wise is getting wise is getting larger, yes, you get a strong trend, yes, that is what I explained. Or if the the 20 EMA and the middle Bollinger Band are crossing, or you get a reversal or a pullback, yes, that is what's happening. If they are getting expanding, yes, they get out of each other, yes, you get a strong trend. If they're getting together and crossing, you get a reversal or a pullback, yes, and that is what I'm gonna show you here. So we get this part here, so it's not so nice, but okay. So we see here they are close together. More they get out from each other away, yes. More they expand. Here is the maximum, yes. You get a strong uptrend. Here is the strong uptrend, yes. You see how price pulls back from the 1 deviation Bollinger Band. Yes, that is the 1 deviation Bollinger Band here. Yes, and you see how price pulls back, and that is a sign for a nice pullback here, and pullback here. Yes, that is because the EMA, the 20 EMA and the 20 SMA, the middle Bollinger Band, are expanding and are going out of each other. Yes, they are not converging. That is the opposite of the convergence. Yes, it is expanding. Yes. So, and when they get together, so that was the uptrend. And when they are crossing or get together, yes, there is a trend change. Yes. Because the Bollinger, the EMA and the SMAs are lagging, you get the trend change late. Yes, you see the trend change already initiated here above on this kind of engulfing candle. Yes, but because the indicators are lagging, you get it after 1, 2, 3. After 4 candles, you get the confirmation that we are getting now into a downtrend. Yes, and that is what's happening here. Yes, you see all the pullbacks are happening now here on the 1 deviation Bollinger Band, lower Bollinger Band, because we are in a downtrend. And you see, if at this point here the downtrend is at the strongest one, because the distance between the 20 EMA and the 20 SMA is the largest. So, and here you get again a crossing, yes, and on this crossing you see there is again a trend change, yes. Here we have a short uptrend, yes, and that is what the EMAs, the SMA, the 20 SMA, the middle Bollinger Band, and the 20 EMA are telling you. This is exactly that what I have explained here. Yes, you see they are getting out of each other. This is here. The 20 SMA is nothing else than the middle Bollinger Band. So let me write this. I should have write down is also middle Bollinger Band. Bollinger Band. So that is this one, yes. So SMA or middle Bollinger Band, yes. So that should be already known. Let me make it middle BB, okay? So it's shorter. So, okay, that is okay. Middle BB, yes. The 20 SMA is the middle BB. And that is what those two lines are telling you, yes. It's getting expanding. You have a strong trend. And then after they are at the maximum and getting closer together, you know already the trend is weakening. Yes, the trend is weakening. Here in this part, the trend is weakening. Here it's getting stronger, the trend, and on this part, the trend is weakening. So let me show you this again here. So it's nobody can tell me that it's not it's so. Here in this part, the trend is weakening. Yes, and on this part here, the trend is getting stronger. You see, here they're getting out of each other, and here they get together. And that is how you can, and here was the climax. Yes, that was the part where the trend was the strongest. And you see here, then there came a consolidation area, and after this, the trend weakened. Yes, and you see here how it changed. Yes, that is what those kind of EMAs are telling you. So let me remove the middle Bollinger Band and the one deviation, and let me put again the other one. So we have now discussed those two. Now we are talking here about the flatness. Yes, it's the flatness, the ranging market is the same stuff like I have explained here with the consolidation, only that they are wider from each other. So where do we have here this kind of flat market? The flat market is here. Yes, you see here how price is ranging. Yes, price is ranging because EMAs are flat. Yes, they are flat in the, but this is not this one. This is this crossing one. Yes, this ranging crossing. Flat is almost this one. Let me show you. Yes, for this the price has to be in between of this. Yes. I would say flatness is mostly this kind of market here, yes, something like this. Yeah, this one here, where market is ranging here at least, yes, because the EMA is flat, yes. But I would like, or this one here, yes, you see this one, is it? Yes, where it's in between of the 200, but it's so close together, yes. If there would be a little bit more wider, it would be nice, but the market is really bad at the moment, yes. And the last hours, so I cannot show you this exactly, but this is already good to demonstrate this. So this part here, it's only a small part, yes, but you see it's the same what I have explained here, yes. Price is in between the 200 and the 100, and then you see you can do the fake out breaks here or the continuation trades, and that would be in this case trades here. Let me show you fake breakouts, and it's also, you see, that's also the 200 and the 100. Yes, it's the same scenario which I have explained there, and then you see how price is ranging here. Fake breakout, yes, here fake breakout and the continuation. That is that are the trades, or this call here, the continuation of the trend, the continuation here of the trend, and the continuation of the trend here. Yes, you see, that is what I have explained, and that is the ranging in between of the EMAs, but the EMAs have to be larger. Yes, if they are getting together, closer together, you have a constriction. Yes, so okay, that is this one, and nice that I could show you this, because at the end you see the market is not always able to show all kind of situations. Yes, so and then let me show you if I can find the next one. That is the steepness. Yes, where it's trending, but all in one direction. So let me show you this. For example, here we have here some kind of steepness, yes, here, but I want this in between of this, but I don't see this. So it's more steeper, it's trending. So you see the 20 EMA here, yes, you see the 20 EMA, how steep it is. So let me show you this. So we have here, always when you have the 20 EMA so steep, you see how strong this uptrend is. Yes, you get here sometimes a retracement, but then you get a pullback. Yes, here pullback, always a pullback, because the trend is strong. This is strong trending. Yes, because the 20 EMA is steep. So let me show you, and that is also the valid for the other one here. For example, here, sorry. here the 20 EMA is steep, so this trend is strong. Yes, you see. Obviously the trend here is general going down, yes, but more steep. The steep the EMAs are, more the trend stronger the trend down. Yes, that is what I tried to show you here. Here we have an uptrend, yes, but because we are here at the 200 EMA, it could be not unfold this trend, yes. So you see this kind of, else it would be here, obviously, because we have here a steep 20 EMA, we would have here a strong uptrend, but because of the 200 EMA, which is flat, we have here this kind of scenario. That is what I tried to explain you. And you see also here 20 EMA steep. Yes, and what do we have here? A strong trend. Yes, that is what I tried to explain here with this kind of scenario where I was telling you more steep it is. Yes, more the trend, more trending it is. Yes. Okay, I think I should. Okay, that is also that was what I have explained was this one. This one here is the S&R stuff. That more steeper it is, more it acts like a support and resistance area. So let me show you this so I can explain this. Here we are ranging, yes. So it's not valid, but you see it's steep. So I can show you this here, for example. Look this. We have here a steep 20 EMA. That means this kind of area is so acting like a support and resistance area that this kind of price pulls back from it easily. Yes, it's far away here. This is what I have explained, the oversold area. This is oversold area, and that is the reason why this is going away here, because we have a steep 20 EMA. So let me show you this in some other scenario. Here's the same. The 20 EMA is steep down, yes, it's going steep down, so we have a strong downtrend, and that means that price not even gonna touch this. Yes, it's this is the 20% of the range, trade range, and this is overbought area here. Yes, and that's the reason why price pulls back here. Yes, because the 20 EMA is steep. If the 20 EMA is flat, like here for example, yes, look here, I show you some flat. Here is the EMA is flat, and what is happening? The S&R, yes, the 20 EMA is going to broken easily. Yes, here broken, yes, easily, because the 20 EMA is flat, and that is what I try to explain you in this video, in this image here, where I explained you if the trend EMA are steep, you have valid strong S&R. Yes, which reacts from far away already. And if you have a flat EMAs, you can mostly expect that those will be broken. So, and the next one is this one about the steepness and the trend, which I have explained before. Yes, if you have this kind of steep. Steep 20 EMA, you see here. You get the pullbacks almost everywhere here. Pullback from the 20, pullback from the 20, pullback from the 20, pullback from the 20, yes, and you see how the trend is going down, yes, and that is what's about. If you have a steep EMA, you know you are on a trending, yes, it's trending, and if they are getting flat, there is a trend change going on, yes, and the trend can be changed. This is what you have to know. That is those kind of stuff which you have to be understanding, because this is necessary to do Forex trading later. Yes, when I'm going to explain you the Forex trades and how to trade Forex, you have to know those kind of basic stuff. Yes. This kind of basic stuff of the EMAs. So, and the last one, yes, the last but not least, because this is one of the most important ones, because this is a dangerous market, yes, that is when the EMAs are crossing, and that is the scenario here. Let me show you this. Where do they cross? Yeah, that is here. Crossing of the EMA is also if they are close together. It's not only crossing, that is here, yes, here, yes, here. When they start to cross, that is where you have to trade, like I have explained with the Bollinger Band, the edges here, here, yes, that is where you have to trade the edges, because this is ranging market. Yes, this is dangerous because you don't know, and you see here, you don't know from what kind of EMA price will reject. And that, yes, and that is the reason why it's so dangerous. Here you have almost in between consolidation area of the EMAs, and that's the reason why you have to focus at the edges, yes, where the Bollinger Bands are, where overbought, oversold area is. Here is oversold area, here is overbought area, and that's the reason why that you have to do your trades exactly at this point if you have DNA crossing EMAs. Yes, that is important, because if they cross only once, like here, you have a trend change, but if they are doing this all the time here, yes, crossing, 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 that means price doesn't know where to go, and that's the reason why if market doesn't know where to go, how you want to know where price will go? And so you have at least at the maximum 50-50 chance, yes, because it can go up and down, and you know nobody knows in what direction market will go, yes, because it's ranging market and the DNAs are crossing. That means they don't know what they are going to do. So I have explained all those things which was important here about the EMAs. I hope these things would be clear now, yes, that you what kind of trades you and what kind of strategy you have to apply on this kind of things. I hope that it's getting closer to your mind, and you get you understood this. And so I would say that would be enough. I have explained those 6 things, yes, about the EMA, the rules also, yes, and I think that was important. If you don't understood it till now, watch it again, yes, and watch also the deep explanation videos again, so everything would be much clearer. So I will try to make this 5th edition of the ebook available as soon as possible, but I try to cover some more concepts before I'm gonna start with my Forex trading. So I would say, if you like this video, do a like. If you didn't subscribe, subscribe, and if you have something to say, drop a line in the comment section, or join the Facebook group, or join the Facebook group. So I would say stay safe and bye bye.